Second quarter earnings season, that's almost upon us, and tracking some of those companies going into their reports. Investors are going to be closely looking at key reports for potentially market moving outlooks. Yahoo Finance's Josh Schafer joins us now. Josh, you've got some handy dandy logos there on your screen. Why don't you break them
Brad,
down
so we got the calendar right now, right? Some exciting earnings we're looking forward to with Pepsi and Delta on Thursday, and then of course you have the big banks on Friday. But what I want to take a look at today is sort of how stocks have performed recently compared to expectations. We talk a lot about beats and misses and sales and EPS beats versus what the street is expecting. So what we have here is how they performed in Q1. You see when a stock beat on EPS, so was better than Wall Street expected for earnings per share and better than Wall Street expected for sales, the stock rose on average 0.5% in the following trading session. But then when you take a look at another outcome, so this is when stocks were to beat on earnings per share but miss on sales, they fell a little bit, 0.4%. And then if we fast forward to a different outcome, when stocks were to beat on sales but miss on EPS, you see that stocks had much more of a negative impact there because EPS, of course, we're talking about profitability. That's something that people are normally watching a little bit more than sales, especially in this current environment, wondering if we're going to see a slowdown. But this is the big one I want to highlight. When you see a miss on both, stocks fell in the first quarter over 5% on the next day. And really what I think is interesting here, and Julian Emanuel, who highlighted all of these for us from Evercore, was pointing out is right now with people uncertain of if we're going to see a slowdown in certain sectors and a slowdown in certain stocks, stocks are getting abnormally hurt when they double miss and not being rewarded as much when they beat. So if you take a look at this, remember this, we got 0.5% beat here, right? That was the positive, that was the most upside we saw, and a 5% downside. Now when we spin it and look at the 5-year average, so the 5-year average of how these normally happen, you see stocks normally only fall 3%, and double beating actually normally helps your stock more, and it would go up 1%. So I think what we're seeing, or what we saw in the first quarter, was people very wary of stocks that are missing on both the top and bottom line, wondering what that means for the overall outlook. Well, not necessarily jumping into stocks that had positive earnings as they normally do. Remember, up 1% here in the first over the last 5-year average, but only up about 0.5% in the first quarter. So it'll be interesting to see if we see that trend continue. Again, Julian Emanuel, the head equity strategist over at Evercore, does think we will continue to see that because we're wondering which one of these sectors, guys, is going to start slowing down and how that's going to impact moving forward in the second half of 2023, right?
Yeah, bottom line, though, it has hurt more to miss.
Yes, it hurts more to miss. It always hurts more to miss.
It always does, but it's hurt a little more to miss in the
a
recent
little more
quarter.
recently.
Yeah, thanks, Josh. Appreciate it.